ready? Yeah, you got me running. Shake it, shake that. Raise your hands up. Raise them out.
All right, everyone. Hello and happy Tuesday as well. And again, welcome to the guys that are watching this live. Thanks to the subscribers of the LCMS Traders Club as well. Now, also, if any of the Forex Managed Account holders are watching, make sure you check the MAM accounts as well. It was a very nice evening and a very nice way to wake up this morning as well to that winning trade as well. Apparently, it was a euro short. So very nice. Now, if you are watching this as well on YouTube and you're sort of new to the whole thing and you're wondering what this is the Daily Currency Call presented by Forex Trading Asia. And it is episode 425 and it's the 23rd of November. And we do this currency call every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. So Monday, we do the Aussie and Kiwi. Tuesday, today, we're doing the Euro. Wednesdays, we do the pound. Thursdays, yen and gold. And then Fridays, we do CAD and crypto as well. And crypto is specifically focused on Ethereum and Bitcoin. And this currency call, we will go through what's moving in the markets in regards to economic news events. We go through the trade ideas and we discuss much more as well. Typically, Gimme will be running the fundamental analysis and anything that's really a big catalyst to move markets that offer trading opportunities. And this currency call will be beneficial to both the long-term investors and also the short-term traders too. And we endeavor to help where we can. We go through the main data points and we explain what that means as well. And we are all about looking to help traders. And if you have any questions, please feel free to ask as well. A quick disclaimer as well, just to end the introduction, and this is quite important. So any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades as well. Now, it is the lead up to the Reserve Bank of New Zealand's interest rate decision tomorrow. And we've got currency strategist here, Gimme, just to go through what is happening with, I guess, the decision and what that means as well for trading opportunities as well. So over to you now, Gimme.
All right, thanks, Scott. Okay, actually, you know what? Before I move on to the RBNZ, okay, before I dive into the RBNZ, let's just look at what happened last night or yesterday, okay? Where is it? Okay, Biden keeps Powell as Fed chair, Fed chief, names Brainard as vice chair. Okay, hence we see tons of movement yesterday around 2100 GMT +8. Around that timing, okay? So yeah, great. So like I've warned earlier yesterday, all right, you know, Biden's decision on who to take over as the next Fed chair, okay, may be released this week. And for some reason, he just announced it yesterday, okay? So it's kind of a good thing that Biden actually renominated Powell as the Fed chair for the second term, okay, for the next 4 years. All right. Why is that the case? Okay, so we actually see a direct impact in the US dollar yesterday when this news was released. Okay, the US dollar strengthened. All right. So the reason why, okay, Powell's renomination will actually lead to strengthening of US dollar is because Brainard is actually a more dovish member as compared to Powell, okay? As we know, as we have heard from Powell over and over again for the past few months, okay, you know, we get so many occasions of reluctance coming from him, from the central bank as a whole, in terms of when QE tapering will start, okay? You know, not thinking about hiking interest rates and things like that. So that actually shows the dovishness of Jerome Powell, okay, as a Fed chief, all right? Now, Brainard is supposedly more, I would say, dovish than Jerome Powell. Okay, so if let's say Brainard were to get elected as the Fed chair, okay, as a new Fed chair starting from next year onwards, all right, then it is likely that we may actually be seeing a later, a later timeline for hike in interest rates. Okay, so as of now, we have seen from the Fed's projection materials that the first rate hike is, the first rate hike may actually come in on 2022. Okay, next year. All right, because with the projected ending of the QE, okay, in mid of 2022, we can actually expect the Fed to start considering its first rate hike next year, all right, maybe second half of next year. But if Brainard were to take over, his dovishness is more than likely to just, push everything back, okay? So that's one thing. Second thing is that Brainard is known to be more strict, okay, in terms of banking regulations, okay? So, suppose Brainard were to take over as, Fed chair, then expect the Federal Reserve to have more, I would say, tighter regulations, when it comes to banking and things like that, okay? And tighter regulations on banking will likely lead to a bit of, I would say, upset coming from Wall Street, okay? And then with that, chances are it's likely going to impact the US dollar negatively, okay? The stock market as well, negatively, okay? So, I guess it's a good thing, okay? It's a good thing that Powell got renominated as his second term of as a Fed chairman, okay, instead of Brainard, all right? So personally, okay, my view is that expect the US dollar to be bullish for the time being, okay? Expect the US dollar to be bullish for the time being. We have seen that, we have heard from the Fed, okay, recently that the tapering will start, well, it has already started actually around probably last week or something, okay? And it's likely going to continue, all right? And I think last Friday or last Saturday, okay, we actually heard from several members, including the vice chairman, the current vice chairman of FOMC, the Fed, all right, Richard Clarida, okay, that, the Fed may actually want to consider increasing the pace of tapering, of QE tapering during the December's meeting, okay? Of course, Richard Clarida is leaving, okay, the Fed as a vice chairman, hence Brainard will be taking over, all right? So, but, whatever it is, we are hearing more and more, we are getting more and more hawkish tone from the members of FOMC, okay? And then right now, with Powell being renominated as the new chairman, okay, then I would say the hawkishness, well, the bullishness of the US dollar is definitely there, okay? So yeah, personally, I feel that, US dollar is likely going to be bullish for the time being. Of course, we have to see and we have to see and hear what the Federal Reserve has to say during their December's meeting, okay? And of course, as you guys already know, trading currency comes with two currencies, okay? Every currency pairs comes with two currencies. We have to trade based on the US dollar and of course, the other currency as well, counter or base currency, depending on which pair you are trading, all right? So do pay attention to, the fundamentals, the political happenings in that, directly related to the other currency, okay, while picking the best pair to trade, okay? So with that, that's the end of my sharing for Powell's nomination. Congrats to Powell, okay? Now, moving on to the Reserve Bank of New Zealand, okay? So they will be meeting tomorrow at 0900 GMT plus 8, okay? Take note that a press conference will also be held at 10:00 hours GMT plus 8, okay? So previously, okay, we received a dovish hike from the central bank, okay? The central bank hiked interest rate by 0.25%, but then we see, the New Zealand dollar actually weakened, okay? So like I've mentioned previously, the initial expectation was for the Reserve Bank of New Zealand to hike rate by 0.5 percentage points, okay? But they ended up with a 0.25, for reasons that, like COVID and things like that, okay? To be more conservative and things like that, all right? So because of that, we actually see a weakening in the New Zealand dollar, All right. So this time round, can we actually expect a hike? Like I mentioned yesterday, yes, we can actually expect a hike. A hike from the central bank is very likely tomorrow. Okay. Now the question to ask is, by how much will they hike interest rates? Okay. Is it going to be 0.25? Is it going to be 0.5? Okay. At the moment, the market expectation is that a 0.25% hike in interest rate has already been priced in. Okay, priced in meaning it is expected that the RBNZ will be increasing interest rate by at least 0.25%. So what this translates to trading, okay, it means that, you know, if the RBNZ were to hike rate by 0.25%, okay, then this is considered a, I wouldn't say a hawkish move. Okay, it may even lead to a weakening of the New Zealand dollar. Okay, so if they were to do that, okay, a 0.25% hike, then it may actually be a disappointing outcome. Okay, we may see a strengthening of New Zealand dollar. Okay, briefly before weakening, just like the previous meeting. Okay, when they actually hike interest rate by 0.25%. Okay. So that is if they hike by 0.25%. Now, what happens if they were to hike by 0.5? Okay. Now, why would they even hike by 0.5, right? So like yesterday, I told you guys, you know, it's because of some economic reasons, okay, economic indicators. Okay, so here are the economic reasons. First of all, CPI. Okay, during the third quarter, okay, in New Zealand, inflation actually rose by 2.2%. Okay, as opposed to the forecast of 1.5%. And back in quarter two, inflation was just 1.3%. Okay, so this is actually a very, very, very strong, I would say, change in inflation. Well, it's not surprising, right? I mean, the whole world, inflation in the whole world, well, except Japan and, you know, probably, I don't know, yeah, probably Japan and Switzerland or something, you know, inflation hasn't been that strong, okay? But other than that, most countries, we are seeing very, very strong rise in inflation, okay? So this strong rise in inflation in New Zealand, okay, back in the third quarter is the first economic indicator that is supportive of a 0.5% hike in interest rate, all right? Second economic indicator, employment change, okay? So employment change was actually 2%, okay, doubling the previous quarter, okay, of 1%, okay. This shows that, well, keep in mind that there was actually a lockdown being held in quarter three, okay, in New Zealand, okay, and despite that being the case, we are still seeing a strong rise in employment, okay. So this shows that, you know, the jobs market, New Zealand's jobs market is actually very resilient, okay. I mean, previously it wasn't, well, it was badly affected by COVID, but right now, you know, with the, I guess, people are just starting to adapt to this whole COVID situation, okay, and things like that. And with the vaccination programs progressing well, you know, we are probably getting more and more resistance to this whole virus issue, okay. So employment change was very, very strong, okay. As a result, employment change was very, very strong back in the third quarter, all right. Now, third indicator, unemployment rate continued to decline, okay. Previous quarter, okay, quarter two, it was 4.0%, okay. In the third quarter, unemployment rate actually declined to 3.4%, okay. And FYI, okay, this is actually a 14-year low unemployment rate level, okay, 14-year low, okay. By that, it has already far surpassed the pre-pandemic level, all right. So we are seeing rise in employment, we are seeing a decline in unemployment rate. So everything, well, I would say the jobs market is pretty much consistent, okay? Because sometimes you may see an increase in employment, but an increase in unemployment as well, okay? Due to participation rate and things like that, but not in the case of New Zealand's jobs market, okay? So third indicator. Now, moving on to the fourth one. As mentioned recently by one of our club members, okay, in ECOFIN, in the currency call, okay, there's this inflation expectation quarter on quarter. Okay, so the inflation expectation is actually a survey carried out by, well, I think it's by the central bank, okay. Yeah, I think it should be carried out by the central bank. It's actually a survey for the businesses in New Zealand, okay, well, asking them if, what do you think of the inflation rate is going to be, okay, 2 years down the road, all right? And they actually forecast, the result, okay, of the survey was actually a 2.96%, okay? Inflation expectation was at 2.96%, as opposed to the previous inflation expectation of 2.27%. Okay, this is actually a 10-year high expectation, all right, level. Okay, and I think if we were to go deeper into the report, okay, the inflation expectation report, businesses are actually expecting the central bank, okay, Reserve Bank of New Zealand, to actually come up with more interest rate hikes. In the next 2 years, okay, which is very, very positive coming from the business sector, all right. So with all these indicators, supporting, a hike of 0.5% in interest rates, okay, from the Reserve Bank of New Zealand, this is why personally I feel that, it is possible, it is likely, I would say, that the central bank will carry out a 0.5% hike. Now, what is going to be the impact on New Zealand dollar if they were to carry out a 0.5% hike? All right, this is no doubt a hawkish move. Okay, hence the New Zealand dollar will likely strengthen. Okay, and instead of just a strengthening for a few minutes before coming back down and things like that, it's likely going to be more sustainable. Okay, sustainable meaning, New Zealand dollar is going to strengthen, and if it's just losing steam for a moment, it's just going to stay stagnated at that level, instead of weakening back down. Okay, so that is probably going to be the impact if the central bank were to carry out a 0.5% hike. Now, this is the two situations that I've just mentioned. Okay, the 0.2%, 0.25%, and 0.5% hike are just pretty much a straight line scenario. Okay, but more often than not, we realize that this is unlikely going to be the case, okay, because we have the interest rate statement to pay attention to, okay, and not to mention the press conference, okay. So what should we be paying attention to, when it comes to the rate statement and the press conference? All right. Now, I think Jean mentioned this yesterday, okay. What we should be paying attention to is, will this rate hike be the last for the time being? Okay, that's the key. That is the key. Okay. Now, the central bank can actually hike interest rate by 0.5% tomorrow. No problem. Okay. And then in the statement, they may actually highlight something like, although we hike interest rate by 0.5%, as widely speculated by the market, it is unlikely an interest rate will follow in the upcoming meetings, something like that. All right. Something along the line. Now, that may actually translate to another dovish hike. Okay, we will see a super strengthening of the New Zealand dollar for a short period of time for the initial, first few minutes upon the data release. And then, we are likely going to see New Zealand dollar coming back down, because that's pretty much the end of rate hike for the next or in the near future. Okay, and if the statement, okay, doesn't indicate anything related to this, then we will have to pay attention to what Governor Orr, okay, the Chief of Reserve Bank of New Zealand, has to say during the press conference, because it's very likely that the reporters, the journalists, will probe into this whole issue. Okay, wow, you guys have a 0.5% hike in interest rate. That is very hawkish. Does that mean that we can expect more, or we cannot expect any more interest rate hike from the central bank in the near future? So, for sure, if it's not indicated in the rate statement, the journalists are likely going to probe Governor Orr in terms of this. So, when it comes to trading, it's a bit tricky, all right? If you guys want to trade this news, okay, as usual, keep it short term, okay, like a scalping kind of thing. Then first thing first, look for any signs of dovishness coming from the rate statement. Okay, they may hike 0.25%, they may hike by 0.5%. Move on to the rate statement immediately. Look for signs of dovishness. Okay, if there's no signs of dovishness, for that 1 hour from 9 to 10 GMT plus 8, you guys can be bullish, can adopt this whole bullish outlook on New Zealand dollar. Okay, you guys may want to buy against some other weaker currencies, okay, yen or francs, or just don't buy against the dollar. All right, the dollar is just very bullish right now. Okay, yeah, just do a short-term trade within the hour, close your positions for profit, and then pay attention to what Governor Orr has to say and what Governor Orr will be sharing during the press conference. Okay, because if there's any signs of dovishness being sent out by the central bank during the press conference, likely we are going to see a weakening in the New Zealand dollar. Okay, so if you guys want to trade, that's how I would, that's the approach that I would take when it comes to trading the New Zealand dollar tomorrow during the news. Okay, so with that, let me see if there's any question.
Nah, no real questions. We're just chatting.
Oh, you guys are just having fun in the chat?
Yeah.
Okay, great. All right. So with that, I will update you guys again 9 to 10, 10 to 11 tomorrow. Okay, I will update you guys again what goes down during the central bank meeting tomorrow. With that, I'll hand it back to Scott.
Thanks for that, Gimme, as well. And I guess I'll wait. Actually, I do have a good nickname. In high school, I used to be called the Shermanator off American Pie. So people used to call me Sherman. That's probably a good name. Yeah, the Shermanator. Yeah. So, and I'll leave the details about that character as well, but that was the nickname. So, all right. So back into it, guys, back at some serious stuff as well. So US dollar index, and really, I think what Gimme mentioned as well with the US dollar index is, quite relevant as well, just in regards to how it's been moving too. And it's something really to behold. And even the Aussie dollar, I just sort of had a look because I do trade. If you do follow the equity chat, I do put in a few ideas, and iron ore is limit up. I mean, that doesn't make any sense. And I did play that yesterday, and I didn't make as much money as Jin made for me. But yeah, so it's just bizarre. And we talked about Evergrande. And so you've just got to be flexible. And I know we've mentioned this a lot, but in regards to this, and I know people love to catch reverses and things like that, but for now, especially the risk sentiment is strong risk on. And that used to mean that the dollar would be weaker if you have a look at what happened in last year. So right now it's very much happy to be moving higher. People see value in it because it is a safe haven currency. So what I would say to this is that this is what it's doing, and above 96, when it broke through here, and we can have a look at the news. There wasn't a lot of news last night. It was obviously Biden in nominating Jerome Powell was seen as a very happy thing for the markets because he does take care of avoiding any taper tantrums. And this has been mentioned before, where markets don't like uncertainty, and they don't like someone that's really looking to raise interest rates aggressively, and especially any quick decisions. Like Jerome Powell seems to be a little more measured. I mean, maybe a little bit too slow on things, but markets are happy right now. So with the US dollar, that article I shared yesterday that Jin wrote, Race to 100, is, that's something that needs to be looked at. I mean, the USD yen as well is moving. So with this, and just a quick glance on the news, really, I mean, there's not a lot of US news really to discuss. It's, later in the week, we've got that FOMC, but then we've also got, like was talked about yesterday, we've got Thanksgiving. So in regards to the US dollar, I'll make a few comments in the USD chat. I've got an interesting graph about the weekly positions from the commitment of traders that I posted. And we're just seeing some accumulation in the long side as well, just with the net large specs positioning. But from an actual trade point of view, dips are being bought. I mentioned this yesterday as well, even on the 1 hour, let's see, I mean, closer to 96 would be nice, but I would just say be cautious if you are looking to catch a reversal. I mean, the Aussie was pretty good yesterday if someone did get that, but we got to wait now for some news to come out in regards to other pairs, because if nothing's happening, the theme is really USD strength. So be cautious about playing against it if there's nothing going on for the currency in focus. And I would say that, yeah, we are looking at more upside here as well. Now, we do have the euro in focus. And That dropped pretty nicely last night. We do have a little bit of news out for it today as well. So got some talking points, and we've got Jin here as well. Nearly 1% made on the managed account as well last night. So hopefully you got enough rest, Jin. That's a silly question. You don't need any sleep pretty much. Silly question.
Thanks, Shumanita. As Chinwei says, I've got 1,000% capacity, so it doesn't seem like I sleep at all. I'm always on Ecofin, right? So anytime someone messages something or posts something up, I'm there replying. But yeah, euro dollar today, prices are down. So that's the Cole's tagline from back then. We have seen pretty much everything dropping right across the board because of the US dollar strength overnight. I'll add to what Scott was just sharing. I think that at that 96.50 level, we're possibly going to see a bit of consolidation before I think, or I'm looking for that push upwards again later today and then tomorrow. I think once we hit Thanksgiving, we're going to see a bit of a quieter time on the dollar. But with all that said, back to the euro dollar, what we are looking towards here on the news is Tuesday, we do have all that PMI numbers to be released. I was sharing all that with everyone during the call last night. I want to show you this. So during last night's call, if you didn't attend the call, you should have, because you would have caught that euro dollar move. I was talking about how the euro dollar was retracing, sitting across, likely to sit across and break that 1.1254. You can't hear, but the commentaries are there, looking for it to break that support level on the H1. So we're looking to see it turn towards the downside. So we had that early indication with the MACD crossing over, the fast MACD crossing over. That's also where, just to give you a bit of an insight, that's where I got into that trade on the MAM so that we could catch that big move or that big drop towards the downside, making that super good profit last night. So with the news, the PMI numbers to be released today, or the German GDP numbers to be released today, we are seeing a bit of a good news scenario on a quarter-on-quarter number from 1.9 to 2.2%. But I don't pay too much attention to individual countries in the Eurozone. What you should be looking towards is the Eurozone as a whole. You can see here, manufacturing PMI looking to go from a 58.3 to a 57.3. Services PMI looking to go from a 54.6 to a 53.5. The general view is that PMI numbers, or Purchasing Managers Index, which gives us a bit of a forward view into how the economy is likely to perform, is tuning back down a little bit. It's still in the expansionary phase, but it is slowing down. And I'm anticipating that this is just a start with the rolling lockdowns that we're seeing right across the Eurozone now. This is last month's number. I think next month's number might be even worse. So with this expectation, we're possibly going to see some further euro weakness to be applied, hence prices are down. And also with the US services PMI numbers and manufacturing PMI numbers to be ticking upwards slightly from a 58.4 to a 59, from a 58.7 to a 59. Still in the expansionary phase, and in the inverse, actually doing better than previous month. So, all things aligned, looking like we're going to see some further downside on the euro dollar. Following on from that, on Wednesday, we do have US GDP numbers quarter on quarter from a 2 to a 2.2%. So again, looking at some uptick in the dollar strength. Following on from that, we have Thanksgiving. Then you're possibly going to see some less volatility, not as big movements over Thursday and Friday. And then you also see that we have a lot of members, ECB members speaking, but possibly not big price movers at that level. So it's actually going to be quite simple. If you can catch trades today and tomorrow, you're possibly going to make some good trades, but following on from that, if you can't, then you would have missed. Try not to force out any trades on Thursday, Friday. So looking at the charts here, the euro dollar on the H4 time frame, we've seen it break, right? We've seen it break that 1.1254 support level. What I anticipate here is that we're going to see it sit across for a little bit. We might see some profit taking. We might see some retracements. So I think that we're going to see that move like that, test at 1.1254 again. But with the PMI numbers to be released, with the good news from the US to be expected, we possibly could see a move back down towards the 1.1075. I'm not sure whether it will move all the way down. I'm not sure whether it will go that full 130 pips, but I'm sure that if you put your take profit at about 1.1075, you have that chance to close out anywhere in between. So I'm looking for selling opportunities below 1.1220. You would have a 40, 50 pip stop loss for a good 120, 130 pip take profit level. You're still looking at a 1:2 and above risk reward ratio at this point for the euro dollar. If it breaks upwards, above that 1.1254 level, I wouldn't be looking to buy it up towards the next resistance. I'll be waiting for an opportunity to sell it back down again. So in the euro dollar at this point, it's all about selling. Don't look to try and trade it on the counter trend. With that said about the euro dollar, looking at the euro pound, it has been sitting right across. You can see that it has been trying and failing to break that 83.84 level, or even that 83.80 level. What I would say is look for it to break below 83.80. You could still see that 60 pip move towards the downside, but I wouldn't put my take profit too high at 50. I would cap it at about 20. So you have a 20 pip stop loss, a 60 pip take profit level, a 1:3 risk reward ratio towards that 83.16 support level. This will be quite a good trade, but it will depend on the euro dollar dropping and also the pound dollar reacting to this support level, possibly pushing back up like what it did 2 weeks ago, bouncing off this support level. Then we can possibly see that euro pound with that big drop towards that 83.16 support. So short and sharp on the euro dollar and the euro pound. With that, I'll pass it back to Shamanada.
Thanks. Is it Jindicator? I was going to change the nickname, but it's thankfully already been done as well, so I can't avoid that. So yes. Now, guys, I have shared the trade ideas as well, and in regards to any questions, make sure that you do share your thoughts or trade ideas in the LCMS Traders Club. And the website is embossed in the actual video for the people watching YouTube right now. So visit that and just follow the links and the prompts, and you can explore exactly what the LCMS Traders Club is all about as well. But that is today's episode. Thank you for joining us, and hope to see everyone for the pound analysis tomorrow. Bye, everyone.